What is up, everybody? As promised, I said I was going to create a video on how I traded some of the geopolitical risk premium going on in oil, and I wanted to make this video to give insights into how I kind of interpret news and trade around stuff like this, which is a video very different than some of the previous stuff I've done. And I would say I've been following the oil market pretty intensely for, God, it's almost been like a decade now, which is kind of crazy. And the oil market is oddly one of the markets that I feel like I have a very, very strong level of mastery over and insight into beyond just normal stuff, because I think I just have been reading about the fundamentals and following some of the research. There's groups like Energy Aspects and Kepler that do like amazing work. And I've been reading some of their stuff for a really long time, and I feel like I'm pretty well versed. And that kind of helps me have the fundamental background to do some of this trading involved. And I think a lot of the lessons and parallels in this video also apply to just all the news trading I used to do. And so we're just going to dissect October 1st. Obviously, a lot has happened over this time, like since then. This is October 5th when I'm recording this, and I suspect even by the end of next week, there probably will be an Israeli retaliation on Iran. So this type of analysis and insight is going to be extremely, extremely helpful for you all navigating this if this is something you dabble in. Regardless, should be a good learning experience. So what really kicked all this off is obviously Israel has been taking out some of the top terrorist leaders in the world recently. And so for taking out one of the leaders, Iran was going to do a strike. And so this strike ended up being telegraphed by the US. So that happened the morning of 10-1. Oil was already down a pre-market for God knows what reason. It was down quite a bit. And we had started to pair that. Then obviously there was the announcement from the US. And so when you get something like that, first things first is like anytime there's going to be strife in the Middle East, you immediately need to just think long oil. Like someone asked, like, why would I not buy gold? Like, come on, dude. Like, it's just like, not that gold isn't a defensive like instrument and way of expressing views and isn't defensively correlated. Like the way more direct trade is obviously oil, like I think when most people think of war in the Middle East, like every day trader, your common sense heuristic should immediately go to oil. Like it's kind of silly to go to, to think anything else. Except, even like the US markets did move on this for sure, because the US can be roped into this and everything else. But at least your first thought, like the most obvious, should just always be oil. I tend to trade the futures. There, of course, are levered oil products. You can also trade the EMPs or even a EMP ETF like XOP, but I tend to use the futures. You can get enormous leverage in these things. Not that I really need that anyways, but anywho. So your first thought on something like that should be long oil. Oil does end up ripping higher. We make a nice leg holding prior bar lows. And so the first thought is like, okay, Iran is going to strike Israel. And so now the thing to keep in mind is this is extremely telegraphed, right? The US is announcing it to the whole world, almost like what we saw during preceding the Russian invasion of Ukraine. U.S. intelligence was aware of this intel and was releasing this publicly to help prep allies and everything else. And so this strike is going to be telegraphed. That is clear. And so then it's just, you need to think of the framework of what was going on prior. And so knowing the oil market, the whole question of what's going to happen is, in the past, oil has spiked. Like if we were to look back during the Ukraine war, oil spiked a shit ton, but then it all pared back. Why was that? Because in the end, no production and no barrels actually came off. So in general, for the last couple years now, maybe for like 4+ years since the original Iranian strike back during was it during Trump? I don't remember. But in general, geopolitical risk premium has been faded hard in the oil market because for the most part, barrels never really come off. And yes, we always are playing with fire and dancing around it, but oftentimes barrels never come off. So with the Russian war in Ukraine, even though we had a lot of sanctions, the truth is those sanctions were all just a facade. The reality is Biden, especially in the face of so much inflation that we were seeing, Biden did everything in his power to sanction and everything else, but it was just a facade, right? Nobody wanted those barrels coming off because the reality is the oil market needed Russian production. In fact, Europe needed Russian gas, natural gas particularly. And without those, Europe, which was already facing a slowdown, I think that was back in spring of 22. Europe was already facing a slowdown. Germany manufacturing was already struggling. You do not want to cut off that energy when the whole world needed it. And Biden in particular was fearing inflation, which was ravaging the country. And so as a result, no barrels really came off. And the other thing is Iran has sanctions against them, but Biden has been turning the eye against those, which in my personal opinion is super short-sighted. And that's kind of how you get in situations like this, is essentially you allow funds to go to Iran, then Iran is empowered to fund terrorists, and you get in this whole loop of unintended consequences. But so the reality is, to help tamper inflation, we were letting things go that probably shouldn't have, in my opinion, really been going. You pay the long-term price of unintended consequences. And so as a result, though, most of these issues never result in lost production. It has been a really, really long time. And so even when Saudi Arabia's Abqaiq facility got struck, that might have been in 2018, but don't quote me on that. That should have been the most catastrophic event that the oil market has seen in probably like 20 years. And nevertheless, oil initially spiked, but it didn't have any sustained impact on flows, because what happened is a lot of countries, and particularly the Saudis, just simply tapped into their inventories until the production was back online, and it really didn't affect the market. Even the Abqaiq attack, which is one of the largest processing plants in Saudi Arabia, which is one of the largest producers in the world, it did not result in sustained supply disruptions. And so that's what we've seen on the last Iranian strike of Israel years ago. That's what we saw during Abqaiq. That's what we saw during the Russian war. So my default expectation is most of these issues have not led to barrels off, and risk premium in oil has been faded for years. This time might be a little different, and I'll get into some of that, but overall, that's my default view, is that risk premium gets faded in the oil market because no barrels come off. So oil does pop, and even this move, like we were coming from 67-ish, over the course of the day, we're already $3 higher. That's like, 4 or 5%. That's a pretty large move for oil. And my general belief, though, was with this telegraph strike, this was an exact replica of what happened the last time Iran sent the missiles to Israel. And so my belief was it's going to be the same playbook as last time. Iran's going to send the missiles, the Iron Dome's going to take them out. Keep in mind, this is telegraphed intentionally, right? I don't my view is that Iran is going to, puff up their chest and act like they're all big, but ultimately they're not going to really escalate this. And so the oil right here at about 12:30 spiked because Israeli airspace was closed, missiles were fired off. And so as oil started to go and grind higher, which again, this is confirmation of the attack, which we knew was so this didn't actually go up that much upon the attack occurring. That's pretty marginal versus how much was already baked in. So my thought was if this attack is what I think it is, where it's just going to be more posturing than anything else, I think some of this risk premium could get faded. And so I was glued to my Bloomberg and the different Twitter news sources, trying to see is this just going to be a repeat of a telegraphed nothing attack? And so very quickly on Bloomberg and other sources that I was following, it turned out that, Israeli airspace was not closed for that long at all. And once Israeli airspace started to open up, that's just an all clear, where it's hey, we know what's in the air. Everything that was dangerous was taken down. And it became clear through tweets and Bloomberg headlines right around this time that the attack likely was the same facade that I thought it was going to be. And now keep in mind, we barely spiked when the missiles were fired. So a lot of this was already kind of baked in. I felt like the price of oil was losing steam. So when it seemed to me that this attack was largely going to be another nothing, And I felt like a lot of traders would think back to the exact prior Iranian missile attack that ended up being just shot down and no casualties, and same deal. Um, I started to work into a short once it was said that, okay, airspace is open back up. Then I'm like, okay, this should be the all clear. And so I worked my short in here, especially given how weak this price action was. Like when the attack starts, the fact that this couldn't go anywhere, that's already a good sign. So I worked into my short here, and my belief was that a lot of this news is going to be somewhat slow to be disseminated versus how fast I can be on some of this versus, kind of more traditional bigger traders. And so one person I always follow who gets a lot of hate despite, it's Twitter. You get hate from everyone. And he's in the political commentary sphere and Geopolitical. So that's even probably more divided than the stuff I do. But he always gets bagged on. And so someone I really enjoy following and respect his opinion is Ian Bremmer. And so timing wise, Ian Bremmer was money on this. So he tweeted out, looks like next to no casualties from Iranian strikes on Israel, telegraphed significantly in advance to the Americans. Iran hoping to establish some minimal level of deterrence while avoiding escalation. And so that was the confirmation for me. And that timestamp, I believe, let me just reconfirm. Yeah, 121, which is back like literally just in here. And so for me, that was my confirmation that it's like, okay, here's a smart dude that knows what's going on and has good sources and is following this. And he confirmed my view. So I then, of course, want the price action to confirm. So this is where I really started to size in. And then I don't remember what headline this was, but this was something to the effect of maybe this was when airspace was opened. This 132. But once the Israelis have really good tech and intelligence. Once airspace was open again, that was a sign for me that okay, the attack's over. They know this stuff pretty much, and so that's when I thought, okay, people are really going to start to fade this, because I think it was another just exactly what Ian Bremmer described. And so this once we broke through here and the volume really came in on, I don't recall what Bloomberg headline that was, but that's when I really started to add to my position. And so this is the type of thing where it's like, I'm not going to use prior bar highs just because this isn't necessarily going to be that clean of a move. Like this is unwind is going to potentially be much slower. And that's where I'll still use the technicals, but more so just play some of the ranges and everything else. And so long story short, I don't have some great explanation for covers, nor do I think I did anything so amazing. My average price was probably up here, which was pretty amazing. And I was just taking, I was scalping, especially when we would shoot down super quick. This is where I would cover on some of the flushes, re-short some of the pops in here, and then just cover as we go down. Some I did end up holding and just covering later in the day. So some I didn't really make that much on. Then of course we end up I don't want too much overnight risk on this. Just God forbid. So one thing that I'd also want to point out is big picture now, so oil's continued to go up, and I guess here's my thoughts going forward. This is actually quite, oh God, I hate that the open interest is on here. What a messy chart this is. One sec. So at this point, oil was coming from 67. We're now up almost $8 on this, and it's all over the headlines. Everyone is talking about this. Everybody is scared. CNBC is talking about, oh my God, oil's going to 100, 200. So the other thing to keep in mind is right now the market is very well supplied, and OPEC has been cutting supply. Most of OPEC is holding back. And so Iran produces something like 3.4 million barrels of roughly, call it the 100, 110-ish million barrel. They're a couple percent of overall production, but their whole production can be totally covered by OPEC, let alone if we get higher oil prices, how much the US can surge with a little bit of time. So in general, unless something absolutely ludicrous happens, really, really major Middle Eastern war, and Iran, in theory, Iran can attack the Strait of, or can close the Strait of Hormuz. But the reality is all the powers that be, mainly US and China, US does not want this going on ahead of this election. And that's a huge incentive for the U.S. to try and apply restraint. China, right? They just stimulus the fuck out of their economy, right? If you can guarantee China, the largest consumer of oil, does not want to see $120 to $200 oil. You want to know what's going to throw the whole world into a recession? $200 oil in a closed Strait of Hormuz and Iran attacking other Gulf states. That is what will send the whole world into a recession. And so the major powers that be on both sides, for once, like both, I don't want to use the good guys versus not, but like the US does not want super high oil prices, especially ahead of this election. Nobody wants war to begin with. No economy really wants this. And China doesn't either. And China is the voice in Iran's ear. And so I suspect Iran just did a simple facade. Israel said, if you do anything, we will strike back harder. And that's where you get this dangerous tit for tat dynamic. That being said, though, like in general, especially us up $8, I'm curious what this retaliation will be. And then you kind of suspect, like my suspicion is that regardless of what Israel does, as long as it's nothing super crazy, like maybe they're just going to target military outposts as opposed to going for infrastructure and in the energy side. Most allies are definitely trying to dissuade them from going after infrastructure. But as long as Iran does not come back over the top in some way, which the reality is Iran does not have that many options. They're pretty limited at this point. But unless Iran goes nuts, there really isn't much they can do. And I suspect over time, this will prove something where another point where, again, barrels don't come off just because everyone's so disincentivized. But of course, the Israelis at the end of the day are going to do what they need to do, and they're not going to be swayed, it seems. That's been some of the messaging. But I don't even think they're going to escalate super crazy because really everyone knows that last attack was a facade. You need to keep in mind that a lot of this stuff is just posturing to deter. What Iran did was posturing to deter. Israel cannot accept that attack and not do something, but it's then just trying to escalate within the realms of not setting the whole, kinderbox off, whatever the saying is. So over the weekend, if this attack does occur, I'm going to be looking, was this a true escalation? Like, did they go after energy, infrastructure? Iran's retaliation, does it become more than just a facade? The other big thing is Monday is the 1-year anniversary of October 7th, which kind of kicked off a lot of some of the strife in the Middle East. So in general, though, I am very biased towards fading some of the geopolitical risk premium. Because we're talking $8 now of So here's the other thing. I don't think the cat's out of the bag now. Like, this is not like the last ones. This risk premium to some degree is here to stay. Like, if you think about it, like after what's happened, nothing's going like Israel will attack. Then you just don't really know when it's over. You don't really know if Iran's going to do something in a week, 2 weeks. So I suspect for once, this risk premium won't fade back. But I also think any spike will be contained unless it's something totally ludicrous over the top that occurs. And again, at the end of the day, like some of the other Gulf states have been, like just last week, I think Saudis were working on better ties with Iran. It's really hard to imagine Iran striking out at some of the other Gulf states and pulling all the other OPEC members in. Just because then you're left with nobody. You're screwed, honestly. It's just suicide on yourself for Iran as a nation. So in general, like, I don't think this risk premium pairs back, but on any attack, any escalation, any spike, I am thinking, was this a facade? And really through the lens of, will real barrels come off at some point? And again, even if real barrels do come off from Iran, if we're talking 300, 400,000, 500,000, even a million, like a million is going to shock the market, but it's covered. And we're already $8 off again. So in general, personally, I'm currently short vol. Like, I don't think, I think any spike will be faded. So I don't mind being short, call it in the high 70s if we spike. And even that being said, I don't think this blows over either. And of course, the puts are super, super expensive because the vol is so high. So in general, I'm kind of short vol right now. Will everything explode on me? Who knows? You could always just get some crazy over the top attack. But that's my thinking at the end of the day. And I think it's going to be important to think through this lens in the weeks ahead. And I hope this helped, and it's a little something different. And it just happens to be in my wheelhouse where I have a little bit more base knowledge than the average day trader. So thank you all for paying attention to this little different trade.